The U.S. president announced late last week new tariffs on Canadian steel and aluminum. That will be applied this week. Let's bring in Maxim Sytchev. He's a managing director at National Bank Financial and joins us to talk about this. Maxim, thanks for joining us today. We're being warned here about job losses in that sector as a result of the new tariff. How do you characterize, please, the effect of a 50% markup on these metals?
Yeah, thank you for having me. I mean, first of all, we have to remember that this is potentially negotiating tactic on the part of U.S. president. I mean, we've seen this back and forth dynamic before. Recall that when we go back to 2018, when during the first Trump presidency, something similar was put into place. Then there were carve-outs, et cetera. And then ultimately, there was a limit on the volumes that were guiding the principles around the trade between Canada and the U.S. The scary dynamic, I guess, right now is whether the 50% tariffs are permanent. At this point, it's very difficult to say, but let's say that they do stay put, given the fact that U.S. is one of our largest partners, and they import 25% of their steel demand. The negative implications for Canada are quite severe on the manufacturing side of things. Obviously, there's going to be some, potential beneficiaries that we can discuss later. But in terms of direct producers, you're talking about 25,000 plus employees who are just on the steel side of things that are participating in this trade in Canada. And by extension, Canadian export just will become completely uneconomic on a relative basis. So it's still somewhat a fluid situation, but nevertheless, it's very hard to see anything positive from this outcome.
How soon do you think it will just bubble up? I mean, the 25% tariffs were absorbed, and there seem to be some workarounds. I'm just wondering how quick, if this happens on Wednesday, we can see this bubble up in that industry.
Again, very difficult to say because, unfortunately, as we have seen with this sort of, second Trump presidency, you could have a tweet, one day and completely the opposite the following day. But if assuming that, the tariffs get implemented as suggested, the negative impact would be, fairly immediate because ultimately the volume or the production coming out of Canada just becomes completely uneconomic. The other thing that, you have to keep in mind also is what's going to happen with the global steel that could potentially end up, here in Canada because the U.S. market would be inaccessible. So you could potentially have a double whammy of having excess supply coming into Canada and Canada not being able to export to the U.S. So it still remains, as I mentioned, a very fluid dynamic.
You've mentioned how integrated the sector is. Can you explain that a little?
Yeah, close to 40% of what is coming out between countries gets remanufactured and goes back and forth across the border. So when you talk about supply chain disruptions, can be, fairly significant. So I think when obviously steel is a major input in many industries. So when you think about the broader impact on, for example, the auto manufacturing, which employs 8 or 9 million people in the U.S. The same thing, on auto, it's around 1 million and 9 million in construction. So you have an industry which in the U.S. employs roughly 100,000 people in steel, which as an input in auto and construction are dramatically much more negatively impacted. So you have that very negative asymmetric impact of input costs shifting up across the board. And when you think about, inflation, what the Fed can do to, potentially stimulate the economy, it's just leads to overall negative impact, higher input costs, higher inflation, and slow growth. So again, on a net basis, it's a highly negative outcome, which is being proposed right now by the U.S. administration.
Is it the same for aluminum? We've been talking a little bit about steel, but how reliant is the U.S. on our aluminum, and are they in the same situation?
Yes, absolutely. So U.S. actually imports 50% of its aluminum needs from Canada. So I mean, technically, it's even more impacted. And I mean, this whole dynamic of trying to bring manufacturing in the U.S. As a long-dated exercise. Clearly, this is something that the president is looking to do. But in terms of getting something done in a relatively short order, I mean, this is a complete non-event. Our focus is more on steel, so I don't want to be sort of pronouncing when it comes to aluminum trends. But ultimately, it's the same negative implications absolutely happening as we speak on the aluminum side. Because
we provide as much as we do to the U.S., are there workarounds for the U.S.? Because they rely so much on Canadian steel, can they pivot to get their steel easily from somewhere else?
Well, pivoting is going to be very difficult because, I mean, the whole point on tariffs was, I mean, Canada is a large supplier to the U.S., but in global scope, very small. The whole push was really preventing Chinese overcapacity spilling into the U.S. So we'll see, obviously, workarounds, whether it could be coming from places like Brazil, Turkey, India, where have seen some imports into the U.S. But the whole dynamic is quite nonsensical because we're trying to prevent overcapacity from China and India coming into North America, and putting tariffs against Canada, which is the closest and most integrated partner with the U.S. It's like literally shooting yourself in the foot. So again, somewhat of a confused policy from our perspective.
Got it. Maxim Sytchev is the managing director at National Bank Financial. Thanks very much for your time today.
My pleasure.